Good evening and welcome back to Be Rich. Today morning, there seems to be bad news engulfing the world, and the world's growth is going to struggle even more because one of the world's biggest economy and one of its fastest growing economies is China. China reported first quarter numbers today. Actually, the first quarter numbers were slightly better than what was expected at 4.8%. This is definitely better than the previous quarter of 4%. But this does not catch the impact of the zero COVID policy completely. Because in the first quarter, two cities, Jilin and Xi'an, were locked down and no major center was locked down in a big way. It is only towards March that Shanghai and Gwangju were locked down. So the real brunt of that lockdown is going to be felt only in the coming quarters. Already in the month of March, definitely retail consumption dropped by 3.5%. Already President Xi Jinping has cracked down on the runaway property prices by putting three red line policies, which I discussed before, limiting the ability of property companies to take further credit. The crisis of 2007-8 across the world and in China meant that China got out of this crisis by creating a property boom with loose credit and monetary policies targeting real estate companies. The collapse of the Evergrande Property Group, one of China's largest companies, and the Chinese government response to it meant that Xi Jinping had decided that enough was enough and property prices would not be allowed to climb. There is also a problem that China decided to move from an investment led economy to a consumption led economy. And because China decided to move to a consumption led economy, one has to watch the consumption patterns in the Chinese economy. The Chinese consumers consumed 3.5% less in March than February, indicating a contraction. The months of April, May, and June are going to be worse because Shanghai implemented a zero COVID policy only in the middle of March, and as of middle of April, there is no signs of opening up. Shanghai and Gwangju are two of the biggest industrial centers, and their lockdown was not reflected in the first quarter. The Prime Minister of China and his trusted financial advisor had said, staked their prestige, saying that this year the Chinese economy would grow at 5.5%. That does not look likely, with the first quarter growth having come at 4.8 and the second quarter definitely going to get progressively worse. And because the second quarter is going to get progressively worse, it will require a major miracle for China to get to its 5.5% growth. Any attempt to massage the books and show higher growth will create doubts in the Western markets about the efficacy of China. Already the investors in China from abroad, especially from Europe and America, are chafing at their nerves' end. Why are they doing so? It is because China, having decided to crack down on its technology muggles using data privacy as an excuse, has destroyed the value of Chinese investments. On the main headlines, the price of DD and Alibaba have crashed. Also, the Chinese government has targeted Tencent, one of its largest technology companies. Alipay and WeChat dominate the Chinese payment markets, and both are being targeted by Chinese regulators. For some time, Jack Ma disappeared and was not seen in public. All this led to a fueling resentment and anger. There is also huge losses have been booked by foreign investors. SoftBank is in serious trouble because a majority of its big holding is a big chunk of Alibaba, which it has leveraged to a great extent to borrow money. If the Chinese crackdown on tech companies continues, Alibaba's value will shrink, and the value of Alibaba shrinks, SoftBank has to pony up more cash. I am just talking about SoftBank to illustrate the importance of Chinese market to foreign investors. So, with this policy of zero COVID, they are having various knockdown efforts. The German president of the European Chamber of Commerce has called for China to announce clear policies on what it plans to do, how and with COVID, and the zero COVID policy does not seem to have worked. While the rest of the world does not have zero COVID, it has taken it on the stride, and by a policy of strong vaccination and repeated vaccination, it has vaccinated most of its citizens, and normal life has come in spite of rising COVID cases at times. As long as hospitalization is under control, the rest of the world has begun to treat COVID as a common cold, whereas China is taking a different route and is asking for a zero COVID policy, which is not feasible to implement. Already, the internet news reports coming out of Shanghai show the plight of the Chinese. So, this is going to take a lot of time for the Chinese economy to recover. Falling Chinese growth has several implications for the world. One and the most important thing is supply chains of China will be in serious trouble. This means inflation is going to rage in the rest of the world for a longer time than what was originally expected. As long as supply chain pressures exist, the factory gate inflation in China is going to remain elevated. Prices of Chinese goods is going to remain elevated across the world, and supply chain links are going to be disturbed, even though Shanghai port is kept open by living in a bio bubble. Goods have to reach the port for it to be exported. This looks unlikely. Therefore, when the Chinese catches cold, the rest of the world has to sneeze, and it is going to be a big sneeze. No wonder the IMF and the World Bank have cut down projections across the world. Thank you for watching. Be rich. If you like this video, kindly hit the subscribe button and turn on the bell notification. If the bell notification is not turned on, you will not be notified every time we put a video. If you like the content, kindly share it with your friends and relatives. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.